In this episode, we'll be receiving a masterclass on equity release and later life lending, where we will discuss misconceptions about the equity release market, what new products are available, and how customers are protected. Providing this amazing insight for us will be today's guest, Elaine Cook from Your Life Equity Release and Later Life Lending. This episode will also cover why Elaine chose to set up her own business, providing equity release advice to clients. Elaine, thank you for joining us.
My pleasure. It's lovely to be here.
Fantastic. Really appreciate you coming on to today's episode. So, like I said, I feel the equity release market has many misconceptions, and I would be the first to admit that I don't fully understand it myself to the greatest of extents. So I'd love to help provide the right information to our audience and also make sure the sector gets the right service and gets the full justice for why they are such great products. So from your perspective, what are the main misconceptions of equity release?
The biggest misconception is losing ownership of the property. So, what people don't understand with equity release is that you now retain full legal ownership of your property. So, a lot of customers say to me, "Oh, I've been paying my mortgage for 25 years and I don't want to lose the ownership of that." Well, you don't. So, that is the biggest misconception, I think. And there's lots of others. So some people think that you can't move. So if circumstances change in later life and you maybe want to downsize or move to one level, we can do that. So most products will allow you to port your equity release contract from one property to another. Subject to the new property fitting lending criteria, it is a seamless exercise to do that.
Yeah, I can totally understand why you would be concerned as a potential client if you think that you're going to lose ownership from your equity release. Like you said, 25 years, many years prior to that, saving up to get your first deposit, working so hard, and that's something that's yours. If you thought you're going to lose ownership, I can totally understand it. But the fact you don't, it's such a shame that people think they do. And looking at the Equity Release Council, 99% of the market is lifetime mortgages.
Yes. Yes. And the products have developed over the years and become all it is now is a lifetime mortgage. So this is a good education piece for people, I think, because the misconceptions can stop people having the opportunity to change their lives. And that's why I love this market, because you can actually change people's lives. And some people think that you've got to make payments all the way through. No, you don't. So you can have interest roll on, or you can make a proportion of interest payments. You can pay all the interest payments. And in fact, you can pay over the interest to chip away at capital. So the flexibility now is key, really, for customers.
I can imagine when you're speaking to clients for the first time, and you can almost probably see the light bulbs turning on and the cogs working for them, can't they? Where you're explaining that how it really works.
Well, you usually get, "Oh, I didn't know that," or, "Oh my God, I didn't know that." Well, that makes a big difference. So, yeah, I think once you can sit down with a customer and give them the full facts, I think that it does make a massive difference.
It must be very fulfilling for you as well, then.
Yeah, really fulfilling, because you can see that sometimes the client is in a position that they don't want to be in. And through no fault of their own, they're in a position where they're struggling on a monthly basis financially, or they want to do something and they can't because they haven't got the capital to do so. So it does give you the opportunity to make sure that those people can do the things that they want to do and sometimes need to do. I've been in a situation before where a client can hardly walk. It's got to wait 2 years to get on a waiting list to have a hip replacement. But by releasing some money from the property, it can change their lives dramatically. And health-wise, it can be a massive help towards the things that they might need to do.
Yeah. So, is that a misconception you see as well, where people think it is just for the holidays and the cars and stuff? But actually, there's often a real more immediate and pressing need, such as medical reasons as well.
Yeah, there's all everybody's different in our world, but sitting down with an advisor allows us to tailor our advice to each individual, and that's the beauty of having advice, because you're having bespoke recommendations based on your own circumstances. So I think that it's important for us to sit down with a client and glean as much information as we can to ensure that any recommendation befits their circumstances.
Yeah, yeah. Okay, that's really, really powerful. And then in terms of those misconceptions as well, is it that they come from the client, or is it from maybe the children, or a bit of both?
Social media has sometimes been a powerful thing, but it's sometimes not been a great thing.
Right. Okay.
So
Yeah.
you do get a lot of misconceptions from social media. And people tend to give a bad rep to equity release because of previous products 20, 25 years ago. And as I said before, the products have evolved and have got better and better over the years. So what is now is a lot different to 20, 20, 25 years ago. So yeah, there's a lot of misconception about the products now, because all it is a lifetime mortgage that
Yeah.
you are not contractually obliged to make payments to if you're not in a position to. Whereas 20, 25 years ago, that wasn't the case.
Right. Okay. And you've mentioned some innovation and some new products. Shed some light on what sort of those new features include, if you don't mind.
Well, the market over the last few years has changed quite dramatically. So people now are in a different position there where they may have been 5 years ago. So I think what usually happens when people retire, they become asset rich and cash poor. And the ability to be able to have some capital is diminished really because the income is diminished. But we're also finding that younger people now are in a position where they may need to do something probably earlier than they'd anticipated. So, situations where people have got high interest now on the mortgages and they're struggling to pay the mortgages, you can use equity release to repay a mortgage. And the new products will allow you to make payments. So you can make contractual payments on a payment term. So, as an example, income's okay, been struggling, but you're going to save £800 a month by repaying your mortgage. And you can afford to pay £300 of that to make some interest payments. So that's great. You still have um, a higher disposable income, and you can also stop the interest rolling on to your new equity release contract. But you know, in 10 years' time, when you retire, your income is going to diminish. So it will revert then to a normal lifetime mortgage where you don't have to make any payments. So that type of contract has been brought in because the customer perception and the customer journey is different now than it has been in previously. There's also a new product where you have no early repayment penalties. So what usually happens with most companies, there'll be an early repayment penalty and the term will vary from 15 years to 4 years to 8 years. But for somebody that, I'll give you an example of one of my clients. One of my clients, self-employed, high monthly interest payments on his mortgage, and he wants to reduce his hours at work, had some health issues. And the only way he can do that is to pay off his mortgage. So we can facilitate that. However, he's coming into some money in 3 years' time because he's got a policy that will mature. And he knows that in 3 years' time he'll be able to pay off the majority of the lifetime mortgage, if not all. So by putting him into a contract with no early repayment penalties, he has choices whereby it's not going to cost him for paying it off if he wants to, or if he wants to pay a high lump sum off, he can do that. And the sort of downside of having early repayment penalties if he wanted to do that is taken away. So it fits in with current market conditions and
Yeah.
people's different sort of situations in life.
It sounds so valuable to have these new products coming out and giving people the flexibility, because ultimately this is a product for someone who's worked for their whole life. They're built up something they're super proud of, and then they can have the flexibility to make the right choices when guided by someone who is such an expert on the subject.
Yeah, and I think again the importance of, well, for me, the importance is always to have independent and whole of market advice,
Yep.
because by having whole of market advice, you have choices, you have the opportunity to make sure that any product fits in with your circumstances, and we can tailor then the recommendation to your circumstances. So things are going to change. We want to be in a position where, you know, we can change for you. But also, as far as whole of market is concerned, it's not just about choice, it's to ensure that you're getting the best opportunity from across the whole market. So we're not reliant on one company or two companies. We have the whole market to choose from.
Yeah. Yeah. And that's an element of how customers are being protected, because they can have a wider scope of choice. What other metrics and systems are in place to make sure clients are being protected when getting equity release advice?
There's a two-tier protection system within the equity release market. So first and foremost, we're regulated by the Financial Conduct Authority, who lay down rules, regulation that we have to follow and to ensure that the clients get the best outcomes. But in addition to that, we have a second tier of protection, which is the Equity Release Council. And the Equity Release Council's remit is to ensure that there are safeguards in place. So there's lots of guarantees within equity release contracts to safeguard our customers. So I don't think there's any other sector within the financial services industry where there's two-tier of protection. So there's a lot of protection in place for clients. And I think it also is important when a client sits down with an advisor is to ensure that they are affiliated to the Equity Release Council, so that they know that they will get the safeguards in place.
Yeah, yeah. And the Equity Release Council make it really easy. There's a find an advisor button on their website, and you can go, check, whoever you're being dealt with, are they on that membership directory?
Yes, exactly. So people can actually check who they're dealing with, if they're a member, and they've got that extra protection and that extra layer of security.
Yeah, yeah. That's a really important piece for people to be aware of. And when we were talking prior to this, we were discussing the need for more education on the equity release sector, the benefits it offers, dispelling some of these misconceptions, like we're trying to do here today. That's something I'm really keen for the industry to be more aware of, because I imagine there's even financial advisors, mortgage advisors who could benefit from a refresh of their knowledge on the market. So I don't know what is out there to try and encourage that, but I would love for that to take place. Do you agree?
Oh, most definitely, and most definitely. And I think there is a lot of information on the Equity Release Council website that will give other advisors in different sectors some really valuable information.
Yeah, yeah. And do you work regularly with sort of other professionals from the industry, likes of mortgage advisors and financial planners who recommend their clients to you?
Yes, yeah. In our market, we have to be licensed to talk about equity release and provide recommendations. So in other sectors, people won't be licensed. So IFAs don't tend to have the equity release license, mortgage providers. So we have introducers that come to me. I've got a client, Elaine. This is their situation. Can you help? So it's a matter of making an appointment and sitting down with the client. And I always encourage the advisors to come and sit with me so that they can see how it works and see how their clients are dealt with, because I think that's important.
I can imagine that has a really nice impact for them, because often a good advisor particularly will have worked with that client for many years, and so passing them over to, you know, another advisor, you want to make sure you're looking after your client because you've got that bond with them. So I guess if they're sat in on the meeting, that must be
Yeah,
really enjoyable for them.
yeah, it does make a big, big difference, but it also gives them that education as well as the client.
Yeah, those light bulbs I was talking about and those cogs work, and you probably see it with the advisors if they've not, it's been a while
Yeah.
since they last recommended a
But then
client.
the advisor will ring me and say, "I've got this client, but from what you said before, I don't think it's going to fit." So, well, actually, you're right. It doesn't quite fit yet, a bit too young, but in a couple of years' time, we might be able to look at things. So, yeah, it is good for the advisor to sit down with an expert and glean as much information as they can.
Yeah, that two-way dialogue must be so powerful because I guess in that situation where you're sort of saying, "Oh, this one doesn't," but where going back to your earlier point of every situation is different. There's so many products out there that have the flexibility. You can go, well, we can do this product with a situation like this. So that two-way dialogue must be so valuable.
Yeah, and the thing is, in the equity release market, what one company can offer, another company can't necessarily offer. And because they all have different lending criteria, a bit like the normal market, really, mortgage market, but they all have different lending criteria, different loan to values. So some companies might be able to offer 80,000, another company might only be able to offer 60. So the 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 expertise that we have, we will know what companies' criteria are. So when we're speaking to a customer, we can actually say, well, you know, this particular product is not going to fit because they won't accept 50% flat roof. However, this company, they accept 100% flat roof, so we can put your application through no problem. So, the more information and education we give ourselves as well is really important, and it's key for our customers.
Yeah, yeah, and that's ultimately what the goal is for everyone. And I know you're very passionate about the clients getting the right outcome, aren't you?
Absolutely. Absolutely. Look, I've walked away from lots of customers and said, look, it's not right for you. Or you don't need to do it. You've got 40,000 in your bank account. Why do you want to take money from equity release? So it's being strong enough and good enough to say, no, it's not for you. And and I think that's important. That will give our market the kudos that it deserves. Because in our market we have lots and lots of excellent advisors from across all different companies. So it is important that we all carry that mantra, I think.
Yeah, yeah. And you've been in equity release for some time now, haven't you? And
I've been in equity release nearly 10 years. So previous to that, I've been a financial advisor. So I've got a broad knowledge of the market, but I would say this is my most enjoyable role because it's the only role I've ever had where I can actually say I've seen a difference in that client. I'll give you a little story. So, one of my first clients, this was nearly 10 years ago, I saw a little old lady. She lived in a flat, not a high value, it's about 150,000, probably less. And she told me at the end of the month, she very rarely eats. She can't afford it. I've not been on a holiday for 20 odd years, Elaine. I can't afford to buy my clothes, any new clothes. I've not bought any new clothes for years and years and years. So I said, why don't you just have a little bit? Just have about 20. That should be enough to give you everything you need. She did. And I went back to see her a few months later. I was in the area and I went back to see her and had a cup of tea. And she said, I've been on holiday. I said, have you? Yeah, I took my friend with me. A flat had been redecorated. She's got a lovely little dress on. She said, I have never been so happy. You have changed my life. Now that has stuck with me for the last 10 years. So that is just, I've got many, many stories, but that is just one of them.
yeah, that's a powerful story. And no surprise that you've stayed in the industry for coming up 10 years now. If that was one of your first experiences, that is going to spur you on, isn't it? And if you're just going
Exactly.
to carry on building and building those type of stories,
Yeah. No, exactly. Exactly.
I can see why you say it's so fulfilling.
Yeah. Do you know what? I wouldn't want to be in another industry now.
Yeah. And that then leads us nicely on to, so you've been in equity release for coming up 10 years now. You've got a good understanding of it. You've seen those stories. You've got the experiences. Earlier this year, you decided then to set up your own business.
Yeah.
And if you ask others in the market and from outside the market, you say, oh, equity release is a harder market right now. Why are you setting up your own business as an equity release advisor, providing equity release and later life lending now of all the time?
For me, it's my customer journey. So the customer is at the forefront of everything that I do. And I want to make sure that I'm in a position where I can spend as much time, give as much time and effort on every customer. If you're working for another organisation, it's a sausage machine. You one to the next, to the next, to the next. And you cannot give your full time to each client. So, working for yourself, you have that autonomy where you can ensure that what you want to do, you can do. So, if I only see one customer in a week, but I've spent 40 hours on that customer, so be it. But if I was employed by somebody, I wouldn't be able to do that.
Yeah.
So, it's
Yeah.
the customer journey is first and
You
foremost.
set up the business relatively recently. Have you seen the benefit of that?
Most certainly. Most certainly. I think the customer's benefit is that I'm able to spend more time, give them as much time as they need to make decisions. I'm bringing in family members more because I can go whenever it suits them, not when my diary dictates. So, and I think that's important because it's important that family members understand what parents are entering into and how it might affect them later on. And most family members, all they want is for their parents to be happy and be in a good financial, strong position. And it's about educating them as well. So that gives me the opportunity to ensure that I can spend time with family members as well. I can see them whenever. I think the difference is that the autonomy and being in control.
Yeah.
I'm not a control freak, by the way.
Well, I'm really pleased for you that it's working and you're seeing those benefits. Because there's one thing in your mind when you're going to set up that business that this is what is going to enable me to do, and then there's another thing of the reality once you're in the situation of, is it going to allow me to spend more time with the clients? So it's so nice that you've already started to see that and seeing the benefits of it. So yeah, I'm really pleased for you. And I genuinely believe you when you're saying about the clients being so important, because through obviously our conversation today, but also in our conversations in the lead up to this, that has always been very much the center of the conversation. So I'm really pleased. Now, in your earlier career, prior to coming into equity release, you saw your fair share of redundancies either for yourself or for, colleagues around you. How does it feel to be made redundant?
Horrific. It is horrific. It's just the unknown, isn't it? And going through that process as well. Are you going to be one of them? Is it you that's going? So that whole process is horrific, and that's another reason why I decided to set up my own business. So I haven't got that fear, but it's not a nice process to have to go through for family members as much as yourself. So yeah, I think that's another driving force as to why I've set up my own business.
Yeah, because equity release is also prone to redundancies as well. We've seen that the market went from 6.2 billion in 2022 in lending down to a staggering 2.6. So less than half within a 12-month timescale.
Yeah,
That's a
yeah,
huge drop.
yeah. Look, we saw higher interest rates. We saw companies restricting the loans so that there was less money available as far as people's valuations were concerned. So we saw a lot of companies reduce their manpower, and most of us in the industry have been sort of first-hand experience of that. And again, having your own business, it gives you that security to know that, well, look, yes, the business is hard, but there's customers out there that need advice and help.
Mm,
So, it's never been an issue for me to go and work for myself, purely and simply because I know that customers, A, will come back to me because they trust me and that we've worked together for a long, long time. But B, because customers, they still need to raise funds for whatever reason.
mm. Yeah, it might be hard for you as an advisor, but equally it's hard for the clients. They're
Yeah,
going through some of the biggest
yeah,
changes with cost of living increasing,
yeah.
and so it's nice that you're steadfast in still providing advice through those difficult times.
Yeah, I mean, you find that through the difficult times, people need your help more.
Mm,
When interest rates were at 2.5%, we were inundated because it was cheap money. It was a way for people to raise funds at a really desirable interest rate. Things have changed, but things seem to be stabilizing in our market. We're seeing higher loan to values now. We're seeing better interest rates. And hopefully in the coming years, we'll see even more drops in interest rates. So as long as customers are aware of what they're entering into and how it will impact themselves and their families, I think that's all you can do. And let people make an informed choice. And without your advice and help, they can't make an informed choice.
mm. Yeah, being in that situation where it's difficult and then also not having access to advice, that's a double whammy of negative, isn't it? So being able to provide that advice, fantastic. Well, yeah, that's really interesting. Now, one thing I like to do on the podcast is at the end of each episode is ask a question that I feel provides really great insight, and I love the answers to some of these. So, Elaine, for yourself, what's one of the best pieces of advice or best lessons you've experienced?
Listen. Listen to your customers. And don't try and speak for your customer. Let them tell you. That's the best advice I've ever had.
Mm. Would it also be listen to yourself as well then?
Yeah, I think, well, if you listen to your customer, you know. You know what,
Mm.
whether that situation is right for the customer or whether you can do something slightly different or whether they need to do anything. So I think the listening side of things is key, and let the customers explain and you listen and you adapt your advice accordingly.
Mm. And I can imagine over the years, you've developed some really good questions to enable you to dig beneath the surface so that you can really listen to not just what they think you want to hear.
Yes. Yeah. And at the end of the day, you've got to understand a client's situation. And over time, people will become open to trust in the market because at the end of the day, the release market is an exceptional market. It's an exceptional product. And the misconceptions in the arena, we need to sort of get rid of all that because I don't think there's any better products in the market as far as flexibility is concerned, as far as adapting the product to the client. Because there are certain things that you can do to ensure that the roll up of interest doesn't increase to a level that is unacceptable. So, well, let's try and make some interest payments then, or let's do a drawdown. You can draw down funds later on. You don't have to take it all now.
Mm.
Take what you need for today and have money set aside in a drawdown that you can draw down on as and when you need it. You won't pay any interest on that drawdown until you do. So it's having the right listening skills and being able to advise accordingly.
Mm. I think that wraps up this episode beautifully for us. I certainly feel more confident in my knowledge about the equity release market and what's available, dispelling some of these misconceptions. I've really appreciated your time and insight, Elaine. So thank you so much for coming on board to today's episode.
My absolute pleasure. It's been great because I'm feeling now that more people will get to know a little bit more about equity release.
Exactly that. And that's my mission. If I can help someone learn about equity release from today's conversation, I see that as success. So, yeah, that brings us on to our listeners. Thank you again to listening for another episode, whether you're at home, on your commute, or just pottering about, whether it's walking the dog or even maybe doing the dishes or something. If you've liked this episode, please give it a thumbs up, and we look forward to you joining us on another episode of Talk FS.